What is going on, guys? Today is April 28th, 2026, and today I'm going to be going over the two trades I ended up taking, one break even and one win, and a little bit of my thought process behind them. And yeah, let's go ahead and get straight into it. Today was a pretty good day, a little bit better price action, better than what we've been getting. I did $1,210 on the day. Today, I was overall bearish. You kind of had to be. I know we did have that big sell off, but what did that tell us? I also took a trade last night in Asia that ended up hitting. I posted it on Instagram though. I was transparent, showed you guys. So took this short again. That was like a few $100, whatever. But let's talk about today. So we ended up selling off a lot from Asia last night. So over 400 points. So in this kind of instance, what do you look for? So just identify this as simple as this. What is the market telling us? What are we literally doing? So we're disrespecting bullish gaps like this hourly Peter array. What do? We inverse that, and all these gaps down below. What are we doing? We're inversing them, and so on. That's literally the biggest question you need to ask yourself. Are we respecting bullish? Are we disrespecting bullish? Are we respecting bearish? Are we disrespecting bearish? We're disrespecting bullish, right? So, and again, we've been trading at all-time highs, so this pullback is actually really good. I think it's really needed, and I think we really needed this. Wow, this is actually really big. My bad. Let me move that. Yeah, so these are kind of the questions you need to ask yourself, right? So what was I looking for going into the day? I was looking for shorts. So first of all, let's go back to where open was, which was right here. So in this example, right, we're trading into this 15-minute gap. This is kind of what, I was looking for in order for us to potentially want to continue lower. I wanted to see some manipulation higher into these gaps and then sort of confirmation downwards. And again, this is realistically the structure you're looking for, right? You don't want to just start selling off and all those other things. But again, disrespecting bullish, we're obviously bearish in this example. Don't force the market and be the hero that says, oh, I'm longing today. Don't do that. We're obviously bearish with clear draws and liquidity down below. Really, really clear draws and liquidity down below. So this is kind of, we also had this. This was like my second draw, right? We had this new day opening gap that we left. And again, so overall, I wanted to see that get filled as well. But I'm going to show you guys where I ended up taking my trade and how it kind of played out. So right off of open, we ended up manipulating higher than lower. So right here off of open, we created an SMT right here, which in turn is kind of like, okay, potentially, we could see some sort of move up here. This was a good trade. I don't care who says it's a pattern trade. It kind of is, but again, this is like, you can call, like Patty has this as his Patty swing. I call it ice swing. Literally same concept. So maybe a little different, but again, we kind of got a really good delivery, bullish SMT here, confirmation to go higher. We have unfilled gaps up above. This is literally exactly what we want to see, right? So in this existence, you could have longed this. You could have targeted this 15-minute unfilled gap. You could have targeted our buy side liquidity up here. You could have, wherever you were realistically looking. But again, this ended up playing out. So I forward tested this on live. But again, this isn't a really trade that I really wanted to see. I wanted to be more patient for the day, right? I wasn't wanting longs. I was wanting shorts. So, that was a little trade you could have taken, but it wasn't really aligned with my bias because I knew we were bearish. So again, let's go ahead and continue to play this out. So in turn, what did we do? We came up and filled this 15-minute gap. Beautiful. This is another thing you have to think about is we did inverse this 15-minute gap. But again, we have this second one up above. So in order for us to truly be bullish, we would have to inverse this gap right here. If we inverse this gap, okay, well then bias is probably switched and we're looking for longs. But we didn't. We tapped into that 15-minute, we're respecting it, and literally in this example, all I'm waiting for is some sort of confirmation that we want to continue lower. So what we ended up getting right here was a 5-minute inverse fair value gap right here. So again, this is the 5-minute that I was watching the whole entire time. If we were truly bullish, what would we have done? We would have had a 5-minute retrace here and then continued higher. But we didn't do that. We had a 5-minute inverse fair value gap to the downside, and that's when I entered my short. Entered shorts here, and I targeted 50 points with a 25-point stop loss, break even at that low. So again, I'm break even at this point. Got absolutely edged and broke me even here. So that's perfectly fine. That was a really good stab, break even trade. Again, my confluences took place. Is literally what I was looking for. So again, break even there. And again, in this example, I'm still bearish, right? I'm wanting to see some sort of confirmation to want to continue this lower. And I didn't really, so we had a massive dump. Let me get to it. We had a massive dump. I did not like any structure to take a trade here. Potentially we had this 1-minute inversion, but again, I really wanted to be patient because of the structure we had. And with my risk to reward, this didn't really make sense. You could have potentially, but again, this wasn't a trade I was looking to take. Didn't like the structure, so I was patient, stayed patient. And as soon as we started to get close to these lows, which is like my overall target for the day, that's where I was like, all right, well, if these targets get taken, I'm not taking a trade for the day I'm done because that's my main objective. And what we ended up doing is we left those lows. That's beautiful. So now I'm like, okay, this is awesome, right? This is exactly what I wanted to see. So now realistically, I'm waiting for this 5-minute gap to get made. What did we do? We made this 5-minute. We got a 5-minute retrace. I'm gonna have to reverse this. So we got that 5-minute retrace. We actually ended up creating a lower time frame SMT from Nasdaq to ES. ES came up and took out this high right here, and Nasdaq failed to do so. So we had that SMT, and again, this was a little bit more of an idea, right? We had a 5-minute retrace, bearish SMT in play, two realistically confluences that could send us lower, right? So all I'm looking for is confirmation in this example. So we have this 1-minute gap right here, beautiful. Looking for an inverse of this gap. As soon as we inverse this gap, this is exactly when I entered my trade. And again, targeting our hourly draws and liquidity down below. Our sell side is where I'm going break even. And as you guys can see, break even, boom. So in this example, my students were kind of asking me about this. I took this live as well, so they hit as well. Really stoked on that. You could kind of say, okay, well, what's the draw on liquidity that you could potentially be wanting to target? So we have these two draws, right? Think about it like this. Right, this is a major draw on liquidity, but if market is pushing lower like this, you're probably going to see some sort of push lower to take out our major draw on liquidity, which is right here. So in turn, you kind of want to be like, okay, do I want to have my take profit at this first initial low? You could have, but again, that's 25 points, and realistically, my main objective was this new day opening gap. As you guys can see, wait, let me zoom out a little bit. We have this new day opening gap, which is like my main objective. So I knew that we had no problem pushing down to this hourly low, which was my full take profit. I was not looking to take this to our new day opening gap. I wanted to take it to the draw on liquidity that I was looking for the entire day. That's what we ended up doing. Perfect TP, as you guys can see. Literally cannot get any better than that. So it's really important to identify your draw on liquidity, the higher time frames. What is the higher time frame telling you? And as well as overall your risk management, right? There was a few good plays I liked in this example. Another thing I do want to talk to you guys about is understanding structure. In this structure, this whole entire leg right here, we were literally we were inversing bullish gaps and inversing bearish gaps. We were literally staying in range back and forth. That's when you know not to take a trade. That's when I was telling my students, sit on your hands. There is nothing to take here. Like, just follow my lead. Be patient. There's nothing to take here. Don't get fear of missing out at all. We finally got this distribution lower. Okay, we actually had like a pretty massive dump, right? Over 100 points. What we left though was the draws on liquidity. In this example, what are we waiting for? A retracement. We got a 5-minute retrace. Okay, beautiful. We also created a 1-minute SMT. After that, what happened? We had this 1-minute inverse for value up to the downside. Confirmation. Okay, beautiful. Execute the trade to your draw on liquidity. Boom. I know that might sound easy, which kind of is, but that's literally what you're looking for. So again, good PA today. Last week was not the best. I had a break-even week last week with a loss, 3 break-evens, and a win. So literally that's kind of like how it goes. But again, this price action is really good. Again, unfortunately, did take a loss yesterday. Not too major of a loss. And I did not do a trade recap yesterday because I was on the road. I was up in Dallas, so I was driving back home. And by the time I got, I was so smoked. Tired. I had a weekend with my boys. It was fun. Yeah, that's literally pretty much how today went. This is literally like prime price action, kind of like what we're looking for. I wouldn't say prime, but like this is good delivery, good price action, and what we're looking for, right? Here, I'll show you guys my executions one more time. Beautiful. So again, these are my 2 executions. I don't know why. Imagine there's a candlestick here. I don't know what that is. But overall, this is it. 2 executions. Take trades that you're feeling convicted of. Let the market come to you. I will share this publicly. Don't go to the market. Let the market come to you. What does that mean? Don't force trades. Don't just jump into a trade because you think. Wait for your confluences to take place and you feel confident in it. One thing that you can kind of ask yourself is before you take a trade, say, am I going to be mad if I lose this? If you say yes, you probably shouldn't be taking the trade. And that's exactly why I did not take this. This was a little bit of a, like I said, a little bit of a pattern trade. This was a trade like I've seen play out multiple times called ice swing, patty swing, whatever you want to call it. But I would be mad if I lost this because I wasn't patient and I jumped the gun. So I ended up fading this. I forward tested it and showed my students that this is potential, that it has potential, and I've taking trades like this, but I would be mad if I lost just because I wasn't patient. So I did not take that. And these two trades I was confident in, and I had good risk management. And this is exactly what I was looking for. Literally as simple as that. So that's what it comes down to. Don't force trades. Let the markets come to you. And at the end of the day, it comes down to your conviction, not what somebody else's conviction is, not what somebody else is doing online. Who cares? Master a strategy, master a model, master the confluences, and stick to it. Every strategy works. It literally just comes down to you mastering those concepts and continuing to practice at it. Like, for example, you have to be okay with the losses as well. No, there's no win rate that's 100%. Impossible. So, be okay with the losses and use them to learn. That's how you, especially when you're just starting, you're learning a model, learning confluences, trying to master them, you're going to take losses. That is how you freaking learn. So stop getting mad at the losses. Use them to build and learn. Okay? And have good risk management. But yeah, that's my trade recap on the day. One break even, one W. So good day. And if you guys have any questions, you could ask in the comment section down below. Like and subscribe. Again, I'm going to continue to post these. I have some cool stuff coming in the future. And I will catch you guys on the next video.